Inflation is not going up. Now, you might remember a few weeks ago I said inflation is going up. So why would I be saying now that it's not going up? For one, we don't know for sure, but this is why it could stay where it is and not really rise like the fear or the concern would be. Because we've had the COVID pandemic, we've had the drastic drop in the stock market and recovery, unemployment is coming up. There's still a lot of flux in the labor market. People are getting new jobs, people are moving, and this gives uncertainty. So even though, yes, there is a short supply for talented labor, there's also a rapid flux where companies are still laying off because they're not recovering. Other companies are hiring. And so there's this shift in the labor market, which may not actually rise prices. There's also a constant driver underlying the economy, which is technology, artificial intelligence, technology making jobs easier, and my ability as a skilled labor position. I have the talent and the ability to use technology and not require as many people as I did 10 or 20 years ago. I can shoot this video on my phone. I can follow the stock market. I can interact with clients, and I can do it more efficiently now on my own than I could have 10 years ago with one or two employees. That's the advancement of technology, is there's less demand for support labor. You still need the intelligence, you still need quality labor, but those who are in unskilled positions or redundant positions in some places are getting replaced. And so they have to constantly hone their skills to find new trades, new crafts, new career paths. And people do need help and assistance and really need bodies on the ground. So there's this constant change that's happening where technology and artificial intelligence is making it less important for people and companies to need more labor, more boots on the ground. This is a constant downward pressure on labor and ultimately inflation. That's why we may not see inflation tick up noticeably above the 2% that the Fed set it at. There are a few things that also pull it down, which is the size of the national debt and the spending we have is huge, but it's not as huge as the US economy. We still have a very strong, a sought after and desirable economy for the rest of the world. That means everybody else's money is going to continue to flow our way. Their labor, their skilled labor is going to want to work in the United States. And that's going to push down demand on the labor market because we're going to have enough people that are willing to do it for a little bit less. Whether inflation goes up or down, I don't know. I think at some point it will start ticking up, but it might only happen after the government starts spending another 10 or 20 trillion dollars in the economy. Then we might see inflation start to tick up noticeably. It might be 5 or 10 years from now. Who knows? I'm Justin Struble with BSG Advisors. I'm not a broker, I'm a fixer.